What's happening, everybody? Happy Friday. We've got a lovely weekend ahead of us, I think. Good football. And at least if you're not a Giants fan or Eagles fan, there's good football this weekend. If you're a Penn State fan, I think this should be – we have a big game this weekend at Penn State?
Yeah, I mean, kind of every game's a big game at this point, but It's against a team we should beat. It's one of those, like, we could easily take it for granted, and then we lose, and we're like, oh, no.
A trap game.
A trap game, yeah.
We had, Iowa losing last week was really big for us because considering we lost to them the week before. So they had a big upset. So that was a good idea. That was good for us.
Well, it depends how you look at it because we lost to them. So it's like.
Yeah, we also had our quarterback situation was a mess. So
yeah,
who knows? Anyways, I'm Ian Walsh, Hard Money Bankers. Ryan Walsh, Hard Money Bankers. We have been going over for the last month, we've been going over the markets because there's been some action in them. And for quite some time, we were tracing, the bull move, the bear move, whatever's going on, because we needed to see if the trend lines, the major trend lines since COVID, were going to hold or not. Because if they didn't, this would be all hands on deck situation. So I've just been keeping an eye on it. There's been a lot of things in the background that have to be addressed, we feel. And in terms of fundamentals, but on a pure chart perspective, which is what we look at each day right now, it's a very bullish scenario. So this is something we were just kind of going over yesterday, just as a recap, not investment advice. Evan Zaremba, I owe a cup of coffee. And there were truck drivers. People noticed truck drivers yesterday on the road. So these are really important fundamental things. But as far as the this chart, this is the Dow Daily. Here's your big trend line that was taken out. This is just a recap. This is your big trend line that was taken out. We were watching to see if this was going to come down and break this trend line, because this trend line here is end of the world type trend line. I think we have to go back and see it, just not seeing it yet. We tracked for a couple weeks the triangle here. That price ended up breaking out to the upside. It was a bearish triangle, and the Fed stepped in and just started pumping money basically for the last 7 days. We're still, this is not today's chart, but today's chart, I believe, is basically looks like this. We were just at all-time highs and sailing up. So what we need to see is the kind of volume that we're going to get here at these levels, because you can see last time we were there, this big red circle indicates kind of an overall top, what the volume was up there, including the volume in the yellow circle, which was when we initially hit it. So the question is, what does the volume look like as we get up here? Is this going to be increasing volume like this, or is it going to be decreasing volume like this? And we'll keep track of that over the next week. On the overall, though, the bulls have won the fight. The Fed has pumped the money in, and we're in a situation where, it was a buy the dip. Technically, again, the recap on what could happen, not necessarily is happening. You can wind up in a double top here. That would look something like that big M. That double top would be a huge red flag to the marketplace. And that kind of brings us into the scenario where we need to talk about, Monday is going to be the anniversary-ish of the, Monday's the 25th. So Sunday is the anniversary of the 1929 stock market crash. So Mark Weiser, you still have one left in there to look at. So, Ryan, what do you have on the recap of fundamentals right now?
Well, I'd say you flew through that recap perfectly. So time-wise, nailed it.
That was
I mean, the whole reason why we're doing this show is because we saw the triangle that you outlined before. Price-wise, it looks like the war is over and the bulls have won, as you said. But what is still lingering here? You're probably already starting to get sick of the word supply chain, but I'm thinking it hasn't even started yet, right? Okay. So we got supply chain and inflation. Those are the two words that are just being thrown out casually by news. And Evergrande, if you want to dig even deeper, would probably be the third one. China has declared that Evergrande is contained, whatever the hell that means. I don't think any of us know, but time will tell, kind of thing, right? If that's going to.
They think it's another virus. Maybe they think it's a virus, like they
contained it. It's contained, yeah.
Yeah, we've got this, no problem.
That is how they're talking about it. Like, it won't spread. That's what they're telling us.
We've got this one, and then somebody's got to walk in the room and be like, "Hey guys, it's It's not a virus.
It's not a virus. That's not. It's not a name for a virus.
Oh, shoot. Okay, yep.
You know, thank God it's not a virus. We don't need to get through that again.
I'm over COVID.
Now, so I mentioned to you, I said I have a theory I want to share, and that's going to be that, we called this all out, saying, hey, we're watching this triangle, just a potential, and it is a fear factor theory, so I don't overly like sharing it, but it's something that I see that could be a possibility here, because I'm seeing headlines like, hey, alcohol prices going up for Christmas. We can laugh about that right now, like ha ha ha. You got to buy toys early. Ha ha ha. Mm-hmm. Come November, December, when people aren't actually able to get their toys and alcohol, they're going to be like, what's going on? Right now, the public's being impacted by it and looking at it. And then you're going to start seeing people say, all right, let's just tighten up on budget. Because gas prices at $5, toys at $50. You'd be like, what? I'm not paying that, right? Totally fine. Because you think it's going to go away, kind of like COVID. Like, I don't know, it'll go away, right? And then all of a sudden it's January, February, and people aren't buying still, and the supply issue is still an issue, right? So now all of a sudden it's like it's just kind of like a teetering, and then it's going to go. That's my new theory with supply chain here.
Well, I think it's the same thing as your COVID scenario, but it's just going to happen slower. Like, your COVID thing was like it dripped out. This is more like
exactly
more of like a creeping over the hill, and then it just like there's a straw that just breaks and just
that'll be the mass, like, hey, this is not solved. And that, like, once people start getting mad at the government, being like, solve this for me, right? That's when it's the all of a sudden we're gonna see it go. But I don't think we're there yet. I think it's still laughing and joking, Yeah,
it's definitely laughing and joking, and like it's just not impact. So I've always felt that in order to get the reaction that the market needs, you have to make somebody uncomfortable. Their creature comforts have to be taken away. So you haven't really taken any creature comforts away. With COVID, you locked everybody in their house. That's a creature comfort, the ability to go outside. So take our things that just make us sit in the middle class, like keep us just comfortable enough to not be uncomfortable. That's where we all, that's where you sit. We'll take those things away. And now you start to push that boundary, and that boundary becomes, the interesting part of what you're saying, which I could see that definitely happening, is like we're also in the cold season. So you're going to have people, not only are you going to have all of these, like, can't get my alcohol, which is a crisis, but you're really going to have, like, can't afford heat. And government's going to have to, there's going to be stimulus package for heat. Yeah. There's going to be stimulus package for this, just stimulus this, and stimulus is going to be the new stupid word, right? So, and then all of a sudden you're going to have a scenario where people are going to be pent up and angry for 2 or 3 months from January to March until it warms back up. So now you're just going to be cold and angry, which is the worst kind of angry, right? And pissed because your kids are, and then you're going, okay, I can't get heat. It's hard to get food. My kids are hungry. People will come out really mad in March.
Especially if they do anything. I mean, we just read an article, the school in Alabama, right? They said we don't have enough food right now. So we have to have kids stay at home 1 day a week or 2 days a week, right?
Yeah.
So like, that starts happening. Like, we can't pay for power right now. We can't get the food. So you got to have your kids at home. You get
and these are just like little out there scenarios for most people right now. But when this starts to like swarm into the masses, or you have major cities that have these incidences, as they've been calling Joe Biden Empty Shelves Joe, he's going to have that's a nickname that'll stick if he doesn't do something about this quick.
Do what? What is anyone supposed to do, right?
Right.
Like,
so I don't really think he even knows it's happening. Like, I don't think somebody's gonna have to like tell him, probably has to tell him multiple times, they're gonna have to remind him again in a month that it's happening. I know there's a whole bunch of jokes about that. Right. But, I don't like, they can't do anything, right? This is all predetermined and designed. Like, this isn't
exactly.
This isn't like, we're waiting for Joe Biden to come up with the solution. Like, come on, like this is like premeditated.
Yeah.
So, but I did see a kind of a bigger headline that came out, which was interesting yesterday, and I'll put this up. This was an interesting one, I thought, which was GM temporarily shuts down North American factories because of chip shortage, which is a supply chain issue. And supposedly there was also Toyota was in the mix of this as well. So when you start now you're going to start shutting down. There's supply chain just has like an endless amount of like what ifs,
chain reaction kind of.
Yeah. So like you just don't know where those chips are going to fall. And this one is important because you go, oh, okay, well, wait a minute. They're going to start losing jobs over this, I didn't really think of that. Like you're going to have a whole bunch of these, I didn't think of that scenarios. And you're going to be like, which domino is going to fall because of it? And then which ones are going to trigger to fall further and further and further because of it. So the fact that GM shut down, I was like, that's, are we going to have a scenario where a necessity is shut down,
that's what hasn't happened, right? So right now it's still just, even those GM folks are probably still getting paid, right? So it's everybody's just watching. And I think that's why it's like, yeah, we've seen 7, 8 green days in a row here, but not confident 7, 8 green days in a row. Right?
No, because you right. You don't have, this wasn't a 7 or 8 green days in a row because of a resolution or a solution to a problem. When COVID bounced off the bottom, there was a solution. There was like an understanding of the vaccine was announced that it was coming, and like it might not have been here, but there was an end play. Like
it wasn't just the vaccine though. It was that people realized, hey, we could still operate as a society. I could still buy and sell products. Right. Like, so it wasn't even totally the vaccine. It was just, hey, financing still, transactions are still happening.
And we're not dying. Like the virus isn't killing everybody, right? It doesn't. So once that was realized, they came off the bottom and said, this is over. This is tricky because we haven't figured out, this was still like, we're still way in the early phases of like when COVID was just coming over. We have no idea like the extent of like what this can cause. And all of a sudden the market, like, this isn't a bottoming scenario. This is literally just a play. I mean, technically speaking, it was the play off of banks declaring big earnings. Like it was earnings season, which does nothing for the general public. So like, hey, great guys, the banks made a lot of money. That's fantastic. Yeah. Raise the stock market. So it's like, wow, that really helps somebody heat their house, So there's such a divergence right now with like, I don't think this is our move. Like if I'm, and I'm speculating, but I don't think this is our move. I think this is a warning as to what's coming. But like COVID made its move to the lows aggressively, and that was clearly the move. But like this just started to make a move. I mean, this is really where we just started to learn things were starting to become an issue. This was like when we had this bar here, this was Evergrande. And then like a day later, started hearing about the supply chain issues. So it was like kind of all right in here. So this move right here was the threatening. Oh, I didn't realize that was still active. This was the threatening move right here in the markets. And then it's just, so a double top scenario here is very feasible to me. Until we have a resolution, until we have a problem that has to fully be recognized, because it can't just go away. Like it's not going to just disappear. And then a solution, like until we get that moment, you have to have a real reaction in the marketplace to do that. And coming into winter in the Northern America is a great time to cause some real headache, in my opinion.
Yeah. I think we're saying price is showing green. So we're trading price. Fundamental news out there, not feeling like green from our perspective. At one point, one of those is going to move towards the other.
Because right now you have like if you were to draw like a chart of like the fundamental, reaction, it would be like one of these things where it kind of went up. Like the other chart would look like this, and then it moved down together with price, and then all of a sudden it's down here, and price is up here, and you have this big gap in between that needs to close. And that's really what it would look like if you were to correlate the fundamentals, like the news and so forth, with the raw price activity. So one of them is going to have to make a move. So either the fundamentals are going to get resolved very quickly, and that chart is going to be equal to the Dow going to 36,000 or 40,000, and it makes sense, or the Dow has to come down to meet the fundamentals, or they have to meet somewhere in the middle. Either way, even if you're in the middle's in this area, which gets close to this area, and when you get into this secondary area, once this line gets looked at,
back in play,
that's a big deal. Like this was a big deal. Like this one was like a pretty big deal. Do you have on your screen the unfortunately, average Americans facing a delay that the same broadcast? Brian says, unfortunately, the average American is facing a delay the same as a broadcast show. I don't know.
Maybe
Our show's delayed?
Unless he's talking maybe about supply chain and like inflation, like it's just a delay. I'm not sure, Brian, if you can clarify what you're saying there.
Yeah. Well, by the way, side piece. So Brian Reed is going to be on one of those HGTV reality realtor shows. Like,
oh yeah,
he got the thing on it for like Jersey Shore. I forget the hell the name of it. If he's still watching, he can tell us what the name of it. It was like Shore Houses, like HGTV or something. He's like,
nice.
Like the realtor. Okay, he's still watching. He'll tell me the name of it. So, but yeah, Brian will be honest. Everybody's got to plug in and watch Brian on the show when it's there. So Brian says, by the time it gets out to us, the wheels are already in motion. Yes. So hard to stop the snowball that's already been rolling downhill. Right. And that's the thing. That's exactly right, Brian. So that's like what we've been. So I look at, there it is. Beachfront bargain hunt, day 2 of filming. Okay. So he's probably on the set. Get us a picture from the set and post it. So what Brian says though is correct and that's what we've been looking at in the charts, Brian. So like the thing I've been doing for the past 20 years that people really didn't know much about with me is like, I'm a chartist. So I watched I enjoy sitting here and watching the bars go up and down in the stock market. It's really a weird thing that I like. Well, there's an art to it. And one of the things I can see is when something is occurring before the wheel, like those wheels in motion, the snowball you were talking about, like you get to peek at that because money gets moved in these bars before the public gets to know. And that was kind of this move in Evergrande and so forth. So this was like flagged me and I was like, wait, what's going on here? What's happening? Right. And then all of a sudden the news started to roll out behind it. So you're correct. Like the whole point of money being, wealthy positions being in play, and retaining wealth through generations of a market is the fact that they protect their wealth. And in order to protect your wealth, knowledge is power, right? So knowledge gives you the insight or the ability to shift your money ahead of everybody else. So you don't get caught in a position where you're like, oh my gosh, I'm losing all my money. You're going to be in a position if you are at the very top of the food chain to not only shift your money and protect it, but also to capitalize on an opportunity that you're potentially putting into play. So like that snowball is in effect. Yeah, right. Kind of like elected officials selling their stocks in early March 2019. So on that note, that's a good thing to also talk about. I forgot I wasn't going to talk about that today. So I've been in the markets for 20 years, like every day. I've easily over 10,000 hours worth of screen time. I follow the markets, right? I didn't know because I just thought it was so absurd to hear this, that like the Fed has now banned policymakers from trading stocks that they might be in.
After they've made hundreds of millions of dollars over the last.
I'm like, wait a minute. This is a new rule? Like how I just assumed the fact that I mean, that is crazy,
how is that
right?
not insider trading in any
not
way?
Only is that not insider trading, how aren't they? Everybody that does that, like if you're gonna everybody that got prosecuted prior for insider trading needs to be let out of jail right now, or all those people that did it need to go to jail. Like what? It's crazy. Yeah, it should be prosecuted. It's crazy making policies for the stocks you own. I'm like, whoa, like that's not even. And then they don't even get a slap on the wrist. They go, okay, you're right.
Can't do it anymore, though.
We shouldn't do that anymore. We shouldn't do it anymore. Everybody pull your $100 million out. We can't do this anymore. Like, I could not believe. I was like, like everybody, I can't tell you how many other traders were probably like, wait a minute, that wasn't a rule before. Are you kidding me? Like all these other rules, because there's so many rules and regulations and the SEC is involved. I mean, just to apply for a brokerage account at a non-professional or even professional trading level, you're just like giving your DNA. So you just assume that these rules were in place. Yeah, lobbyists will cover their losses. Yeah, it's so that I'm glad you brought that up. The other headline that was,
But here's the thing: like we know the game is rigged. Like if you're a trader, you know this, right? Like that's not you know the odds are stacked against you playing this, right? You're like it's messed up. It is what it is, but I'm I'm here to make money, knowing that's the rules of the games. Like a casino, right?
yeah.
I don't think it's fair. I think it's bullshit, and they should all be prosecuted. Don't get me wrong. I'm not saying
Well, fortunately it doesn't have any impact on the way I trade, but for the average American, that's like, look, like, come on, like, I mean, but then again, I'm like, it completely makes sense. Like, what, am I naive to think that that wasn't the case?
Exactly. That's my point. That's
Yeah,
my
of course
point.
it's happening. Like,
Yeah.
oh, I thought it was a fair game. No, it's not a fair game. It's never been a fair game, and that's okay. We just all play the unfair game. That's the deal. Brian says, Martha Stewart has a bone to pick with everybody right now. Is she like? Like somebody owes Martha Stewart something. That's for sure. I mean, that she literally was the headline of insider trading, right? And went to jail. And now the Fed goes, oh, that's a rule. We can't do that anymore because she's not a policymaker. I don't know. I mean, it is debatable whether Martha Stewart is a policymaker. You know how many housewives that she could just rally and lobby against the entire, like the things that she could get housewives to withhold. It'd be trouble.
Right.
It'd be trouble. Don't take the insurance. Every bet favors the house. Yeah. So that's the thing. So trading, Brian's right. Like, so the one thing I've learned about trading is like, I definitely can't move a market, and apparently policymakers do a great job at it. So the whole thing that I'm always doing is like, I'm always tracking and looking at the whales in the market and just whatever they're doing, whether it's a policymaker, whether it's the Fed just pumping money, whether it's a big corporation, I'm just following the whales and grabbing on their coattails. And sometimes I try to get a little bit ahead of them, but the bets I take are following them because the edge is with the markets or with the whales, and that's the reality. So
trying to bet with the casino, basically.
You try to play with the casino. Yeah, that's really what you're doing. Because if you try to play against it, you're going to have policymakers that are going to move the market and whatever. So I don't get upset about this scenario. I just thought it was ridiculously silly. Like, I was just like, wait a minute, this wasn't a rule to begin with. Like, I just thought it was like so obvious that like if it was a rule and then it was happening, I'd be like, of course it's happening. But the fact that it wasn't a rule is like, seriously, like you're just take that salt and just pour it on the wound. Like,
it's like if you're playing Monopoly, you know how there's always one person that's the bank.
Yeah.
It's like if the bank person is making up the rules as you
like,
no.
You rolled a 7 there. This next dice,
Right.
this next dice is a 6. I'm like, you're like, dude, that's Park Place. Or like, dude, what do you mean?
But they own Boardwalk and they own Park Place, right? Because they're like, yeah, I make the rules up, so it's mine.
Yeah.
I own it.
Yeah, it's really and as long as you learn how to like grab onto their cart as they move their piece, it kind of works. But
yeah, so Ian, I get a lot of people, a lot more than I thought, are actually watching this show. So, like this week, I probably had maybe at least 6 or 7 conversations.
I have had people, mention that they watch it. Cannabis is the biggest example lately. They know it will be legalized. Yeah, so it's interesting you say that, Brian. I am actually a small owner in a cannabis store in Maryland because I'm just. Sure, it makes sense. Policy owners, but yeah, we have small stake in that. And yeah, the whole cannabis movement is just about everybody getting their hands in the pot, policymaker wise. But yeah, it's a big movement. So what are you saying, Brian? So people are watching the show?
Yeah. And the question that keeps coming to me is, what are you doing? Are you buying? Are you selling? What do you do? We're talking real estate now. Back to real estate.
Okay.
So what do you do? What do you I mean, what's your insight right now? What are you doing?
I mean, I guess there's shifts in the market in real estate where like I like become defensive or I become offensive. And I would say we're still doing deals. Like the market's still moving. There's definitely a softening. There's definitely a lowering of demand that's noticeable. That'll probably we'll start to see that in the reports in like December, January. But I'm underwriting from a more defensive position. It's really hard to say, would I just stop lending for like 3 months? Like that, it's almost an impossibility to like think that that's the right play. Because like, what if it's like, all right, I'm gonna stop for 3 months, and then it's still open for 3 months, and 4 months goes by, and 5 months goes by. You're going, I'm going to jump back. Like you can't play that game with yourself. But the defensive underwriting. So I would say people that are buying right now is always, if the comps stand, they stand. Like you can't look back at yourself and be like, oh, I should have done this. I should like. You're going to always say that at the top. You're always going to say that at the bottom. I should have bought. I should have sold. What you can only go on right now is exactly what your comps are telling you. So be really tight. I would say be really strong and committed to your ability to comp and know what you're doing. This is not a time to speculate. You could have speculated probably 6 months ago and gotten away with it, but no more speculation. And underwrite more defensively, or look at your deals. If you're like, maybe I should offer 60, but I could offer 70 because it's in a bid war. Like, stick to your guns. And if you were at 60, you're at 60. If you're at 50, maybe go lower. Buy low. So, Brian says, he buys short-term rentals that pay for themselves in 16 to 20 weeks or 25% down. Yeah, well, that's a great strategy. Yeah, you could pay off a rental every 20 weeks with 25% down. That's actually really good. So on a little bit of a side note for that.
I mean, you should be doing that in any market. That's a great.
Yeah, you should be doing that in any market. Yeah, but that's a really good play for we're short-term lenders, right? So like our money is technically exposed for up to a year, so it keeps us pretty fluid in the marketplace. Whereas like if you can pay off a rental every 16 to 20 weeks, it keeps you fluid in the marketplace, and it doesn't expose you to like long-term cycles quite as much. So anytime you can kind of move at that kind of speed, whether it's lending, whether it's rentals, whether even flips in a short-term period, I think where you can kind of get yourself in trouble is if you take like a project that takes 4 or 5 years and you buy it, a big project takes 4 or 5 years, you buy it at a higher price back in, anybody that bought at a 2007 top that needed 4 or 5 years to complete a project got smashed upside down, right? So anytime you can move quickly inside of 6 months, no matter what you're doing in this business, it definitely helps you because the market can shift really quick. I mean, I remember back in 2008 when it was like you couldn't go beyond 90 days for your comps. So that's how fast it was moving. But even then, a 6 month movement is still pretty insulated to save your tail if something were to occur. The 3 to 5 year projects can get pretty dicey though. So that's my opinion on the real estate market.
Yeah. And I'd throw in right now, add several months to any rehab project right now. It's just, you don't know what supply issues are going to be impacted and whether or not it's going to be resolved. So when you're crunching your numbers, if you're saying I'm going to be out in 3 months, say, no, I'm going to be out in 6 months. Right.
And add potential cost of material.
Yes, exactly. So as long as you're doing those two things, you're kind of padding yourself with the current data. If the market takes a massive turn that we were kind of watching last week, as we said, we'd be happy to have our money in real estate if it really goes. That's going to be the safest spot to have your money. So, or
a safe spot. I mean, it's a secure spot because the speed the markets move nowadays. You don't know if all of a sudden you go in on a deal and your way out, you got to take the money in crypto. Like, who knows, but the point was you got to secure, there is a value to the thing you secured it against. So whatever that value is, at least it'll be transferred, over to a new denomination or whatever it may be. Inflation is a little tricky though, but even I'd rather just carry real estate through inflation if possible. I'd rather sit my money in it until it balances, it levels itself out. If the solution to inflation isn't to buy an additional or to transfer over to crypto to begin with, but
right. Yeah, I mean, that's part of the pros and cons of real estate kind of lagging behind the market.
Yeah,
it gives itself time to balance out.
But you also can't, a lot of people, you can't get your money out of it either,
can't liquidate
right?
it right away. Yeah.
Yeah, so you're not like a bank account. So if you're, a balance is always good. I definitely keep, liquid cash, but not a ton. Like I'm not like Scrooge McDuck where I have it all in a vault and like swimming this cash, not doing anything. Like I keep my money in assets because I don't, I look at it and go, all right, if I need more than this for a survival situation, like there's a bit like that money, that whatever money was in those assets anyway ain't gonna matter, so it's just kind of how I look at it. I think we should do for Monday is pending there is no full on like giant red crash bar on Monday. Is Mark Weiser still in play? I think maybe we switch over. We still track. We're still going to track in case this thing starts to double top. But maybe the show would like to see like the REIT stocks analyzed, so we can bring up the an REIT and crack down the chart from there. Because I remember last time I looked at it on the weekly, there was an REIT that was showing a pretty big like engulfing candle when this all started, like basically over here by this red circle.
Sure.
So I'd be curious to see how that's looking right now. I do think something that I want to that I was just glancing through some of the charts, and I looked at the weekly on the Dow, and the weekly chart is not nearly as scary looking as the daily chart right now. So the weekly hasn't been spooked yet. So I think what we'll need to get down, I'm guessing, I mean, this is just a guess, but to get down to this line is probably going to be a heavy week. It'll be like a week of just blood red. And then all of a sudden you look at the weekly chart and you go, oh, there's a scary bar on here. And then it flags, when that bar stands out on a chart, like if you just glance at this chart minus all my markups and stuff like that, there's a few things that if you just quickly in 10 seconds, 5 seconds glance at it, you go, okay, this bar and there's this bar, these are like big bars that stand out on the chart, just glaring objects. Other traders see that, other people see that, and they recognize that. So the weekly doesn't have that yet. It doesn't have that moment. Whereas I think that's what it'll probably take to really get everybody on deck for. And it could be when Ryan, it could line up to when Ryan said, it could line up to that. Everybody goes, like no alcohol. I really can't get my alcohol. No, heating. My heat. I can't afford heat. Like when you get to that level, you start to get into the panic state. The panic state starts to drop like a rock. This isn't over.
Yeah. Until the supply chain and inflation is actually solved, I'm with you. I think that only gets worse and worse.
And Evergrande, like this isn't going away. It doesn't. Evergrande did this to the market to begin with. Like this is what we saw happen. This move right here because of Evergrande. It seemed very correlated. So it didn't get resolved. So it doesn't get to make this move and then just disappear. Like that doesn't happen. So something has to happen here to bring this back into Evergrande has to do something resolution wise to make this make sense. And China just saying we have it contained that's not the solution.
Right.
If Evergrande was not a factor in the marketplace, if it really was not connected, it couldn't have made this move. It wouldn't have done this. It couldn't have done this, but it did. So the fact that it made that impact means we're still waiting. So next week, end of the month, anniversary on the 24th, Mark Weiser's crystal ball. Evergrande has to make their 30-day payments come due. Supply chain issues, getting colder, et cetera, et cetera. Next week could be, I don't know, maybe we just stick with the Dow until the end of the month, right? Maybe that's the play, and then we'll switch over to, because I'd like to just see what the end of this month ends up looking like.
I think that's the play. I mean, that's what when we started the show, we said we're going to watch this move, and we kind of line it up for October. So let's finish October, and then we can move to the REIT.
All right, I'll dock up a new chart for Monday, and everybody enjoy the weekend and look for news. Everybody check for news on the weekends. Best time to really catch everybody off guard on a Sunday night. The market's open, so keep your eyes open. Oh, and look for your late Friday, casual bomb being dropped right when the markets are about to close. That's always a good one too. All right, see you later.
Cool. See ya.